Hello, this is Steve Sanangelo from the SRS Rock Report, and I'm glad you joined me today because in this video update, I'm going to discuss the global meltdown that we're now experiencing and its major impact on silver investment and the market in the future. Now, before I get started, I just want to say the work that we do at the SRS Rock Report, I don't believe you'll find this information anywhere else on the internet. However, there are a few individuals that are doing excellent work as well. Chris Martenson at Peak Prosperity does great work on how energy is impacting the global economy and financial system. Then there's Gail Tverberg at Our Finite World. And then also it's Louis Arnault, the work by Louis Arnault and the Hills Group on the thermodynamics of oil depletion. But unfortunately, most analysts continue to provide incorrect and unreliable forecasts. And there's three groups. And the precious metal analysts that I've been following, they put out great work why the metals are a great store of value, but they don't understand or care about energy. And this energy cliff that we're now facing and how it's going to change the world going forward. And then the second group are the energy analysts. A lot of them I follow. They put out interesting work on the falling energy return on investment, peak oil, what's happening in the energy markets and industry, but they don't understand or care about precious metals. It's interesting, even though they know the dire energy predicament we're facing, they continue to stay in the paper financial system, either 401ks or pension plans or financial assets. And then last but not least, the worst of the bunch are the financial and economic analysts. They don't understand or care about energy or precious metals. So they're moving forward, putting out an analysis, mainstream media, financial and economic analysis that's totally superficial, and they are not providing the important information for Americans and other people, individuals around the world to be prepared for what's coming. For example, back in 2005, 6, and 7, I knew there was going to be a financial crisis. I was following it. And so I sold our business in the big city and we moved out to the country because I knew there was going to be a financial crisis and stock market crash. And sure enough, there was. But what's interesting, from 2007 to 2009, at the bottom, the global total petroleum liquid demand only fell 2 million barrels a day. Now, this time is indeed different. According to some of the best analysts I've been watching, we're about 75 million barrels a day, 25 million barrel a day decline, and it could be even higher. This is 10 times worse than when it was in 2009. While we could see a recovery going on, I don't believe we're going to get up anywhere near to where we were before. It's going to probably remain at least 10 or 15 million barrels a day lost. This is very bad news for the global economy and financial assets. Before I get into the silver investment in market, I wanted to show you some updated economic data. And this is the U.S. uninsured employment rate, and it's now at 11.3%. In April 11th, it was 1.4. And this is the uninsured employment rate, is the number of people receiving unemployment insurance as a percentage of the labor force. And it goes up each week. Each week, we're getting millions of people now getting unemployment insurance, and they just divide it by the number in the labor force. Now, according to some analysts, they believe that already the U.S. unemployment rate, not the insured unemployment rate, the real unemployment rate, is about 15%. And if it's 15% and the Dow Jones is still trading at this 24,000 range, where when it was 9% unemployment, it was at a low, trading at 6,000, 7,000. So the markets, I believe, still have a long way to go before they get to a correction phase down here. Now, some of this information I get from Zero Hedge. They put out some good articles, and this was this weekend. It was about the food lines in the U.S. So I did this comparison during the Depression, during the 20s and late 20s and 30s. This is the New York bread line, 1931, and we can see the men standing in line to get bread. And the difference is people don't stand in line today. They get in their cars and drive. And what you don't see here or a bunch of tents in line, and they have all this food stocked up, and people come over and they put the food in their car. But this is the San Diego food line in 2020. I don't believe people realize what's happening. As this supply chains are breaking down, uh, I don't think they understand that things are not going to get better quicker. We're going to see a continued disintegration of this global supply chain. And I believe we're going to start seeing more food shortages coming. So this is the U.S. imports of goods by customs basis from China. As it fluctuates, but we could see here in September 2019, it was 40.2 billion. Now, I believe with the tariffs that the Trump administration was putting on the Chinese, it was impacting the imports. But due to this global contagion in February, it fell from 40.2 billion down to 22.8. That's 43%. Again, this is as of February. What about March and April? Well, even though the Chinese said they went back to work, the end of March and now in April, what are they manufacturing for? What demand? The Europe has been shut down. The U.S. has been shut down. South America has been shut down. So even India. So what goods are they manufacturing? Because there's no demand right now. So I think we're going to see this number fall drastically over the next several months when the data comes out. Now, this is U.S. housing starts, total new privately owned housing starts. In January, it was 1.6 million. And in March, it's now 1.2. You could see the huge drop, 1.2 million. That's a 25% decline, 403 units less than it was in January. Now, how about April and then even May? Even though we might see a recovery in June and July, I believe this is going to continue lower. We're going to see less housing starts, especially in the second half of the year when all this damage that's been taking place in the market actually starts to follow through in the second half of the year. Now, with Americans on lockdown, people unemployed, small businesses now are suffering. So the U.S. Fed and the U.S. government is sending out checks and propping up the market. And this is how it's impacting. This is the U.S. public debt increase, first quarter, January to March 31st versus April 1st to the 23rd. So in the first 3 months of the year, the U.S. public debt increased by 486 billion. And just the first 3.5 weeks of April, it's up $1 trillion, 1 billion, 1,000 billion, 18. So in the first 3 months, the average increase in the U.S. debt was 7.5 billion a day. Now it's been 57 billion a day, almost 8 times more. And this is going to be very disruptive to a lot of the financial assets, real estate, and even all the investment, the paper investments, pension plans, 401ks, and in time, the dollar. Now, getting back to why this is important, as I mentioned in my previous video, the global financial Ponzi scheme, what keeps a typical Ponzi scheme going is new investors' funds. What keeps the global financial Ponzi scheme going is increasing global oil production, because that generates the economic activity that allows this to continue. When you see this kind of decline in oil demand, it is destroying financial assets left and right. And in this recent article on Zero Hedge this weekend, we are moving into the end game. 27 tankers of oil anchored off of California, hundreds off of Singapore as the oil industry shuts down. So there are 27 tankers, they say, that are now anchored off of the port of Long Beach, California. I counted as best I could the red dots here, which represent the tankers. There's at least 75. This is off of Galveston, Texas. And then in Singapore, it's 200 plus. So because the demand has fallen 25%, what the market has been doing is storing all this oil. Well, now that's becoming full, and it's going to impact the oil price. Now, I've shown some of this this is a Commitment of Traders COT report. This is as for oil, U.S. West Texas oil. Now, When you see the red lines, these are the commercial short positions. When it's very long, that means it's a very large commercial short position. And at the end, in January 7th, when the oil price was a high of 64, then it started to sell off. We could see as the price sold off, it liquidated, the commercials liquidated their shorts. But guess what? Look where the commercial short positions now. It's about the same level it was when oil was trading 64. But on April 21st, the last COT reporting time, the price of oil was 11. So now look how many more shorts. That is really going to negatively impact the oil price. We're going to see single digits and negative oil prices again. And quickly, I just wanted to show you, this is the WTIC crude oil futures chart here for April 27th. It's down about $4.50 when I did this chart. Now, what's interesting, when all these traders were buying oil a month ago, when the price was in the 20-25 range, they were hoping that they were going to sell it in the next several months or so when it was higher. And back then, the futures contract, it was 20 or 25. And as you went down, it was in the 30s, 38, and down here, it was like $40. Well, look at all the futures prices have collapsed. So now these traders who have purchased oil that were hoping that they could sell their oil in the next several months, the prices have collapsed. And I think they're going to get even worse. We could see these in the teens. Now that's bad. What's happening with oil is going to be bad for the global economy, but good, I believe, for silver. And the reason why it's been very good for gold. Silver's been languishing, but I think it's going to be very good for the silver investment and silver market. And the reason why is a 55%. This is a breakdown in global silver mine supply in 2019. That this information just came from the new Silver Institute 2020 World Silver Survey, came out last week. 32% of silver comes as a byproduct of zinc and lead production, and 23% of silver comes as a byproduct of copper production, 16% for gold, and 29% for silver. So zinc and lead and copper, which are the base metals, last year supplied 460 million ounces of the total 832 million ounces. So 55%. I believe we're going to see problems with the base metal in the future, especially at the end of this year, and we're going to see a lot less supply. And if we look at the next few charts, this is stage one. I said in my previous videos, there are going to be two stages to supply disruptions for silver. The first stage is this global contagion where they're shutting down, locking down to protect from the virus. And so now Peru just announced last week that they're extending their lockdown until the 10th. So that means Peru will be closed down for nearly 2 months. And in those 2 months, that's about 22 million ounces of silver that won't be produced. Mexico also announced last week that they were extending it to May 30th. I've noticed they're getting a lot more new cases. And so they've extended their closure to May 30th. That is 2 months. So that's going to be about 31 million ounces of silver that won't be produced in these last 2 months. You add those up, it's about 50 million ounces already. However, looking at this, this is a copper market commentary from FreeportMcMoran. They are the largest copper producing company in the world. And this is their presentation from their Q1 report of 2020. And it says that 13% of current production has been disrupted already for copper. And here we could see that where the copper consumption is. China, 51, half of the consumption is from China, 8% US, Europe is 15, the rest of the world is 26. Well, China may be purchasing copper, but they're not really using it right now in manufacturing. And again, this was based on this Wood Mackenzie, this April 17th data. So if we're already seeing a 13% of copper production has been disrupted, the second stage is going to be what happens to copper demand and supply in the second half of the year, where I believe the damage that's taking place in the US and global economy will mean that the world will need even less copper in the second half of the year, which means shutdowns of copper mines. So in this article by Reuters, How Low Can We Go? Analyst/base metal forecasts. It's called Apocalypse Now. Median cash price forecasts have been for 2020 have been across the metallic board by anywhere between 21% for nickel and 9% for aluminum, as analysts try to price the cumulative demand shock from the collapsed automobile sector, a partial lockdown of the construction sector, and plummeting consumer confidence. Now, Goldman Sachs expects global demand for primary metal, these are the primary metals, base metals, to fall 5 to 6% in 2020, eclipsing the impact of the global financial crisis in 2008, 2009. Well, I showed you the chart before of oil only falling, demand for oil only falling 2 million barrels. It's now down 25 million barrels. So I believe it's going to be much worse than the global financial crisis. Now, it says demand hit outside of China will be about 15%, on par with the global financial crisis. I actually believe that the forecast for SRS Rock Report, I believe by the end of the year, I think base metal demand will be down 10 to 15% or more. And if that's the case, it's going to impact silver supply. Now, copper. This is a breakdown of what the world uses: copper, zinc, and lead. About 44% of copper is used in construction. And then 20% is in the transportation industry. And then 19% is in electric and electronic. Well, this is getting hit really hard now. And I believe it's going to be even softer. We're going to hit less demand in the second half of the year. So I believe we're going to see a major hit to copper demand and supply in the second half. The same with zinc. 50% of zinc goes in galvanizing metals like steel, and then 17% in alloys and then brass. I believe zinc is also going to be hit very hard, especially in the second half of the year. And then lead, which is interesting, 80% of lead is used in batteries, lead acid batteries. And right now, over the last month, the global automobile industry has been basically shut down. So I think copper, lead, and zinc, towards the end of the year, we're going to see at least 10 to 15% destruction in demand and supply. And that's going to impact the silver supply drastically. Again, I wanted to show you if copper, 40% of copper is in construction. Well, this is total construction spending for the US. And as of January 2020, it was 1.38 trillion. Well, it's starting to come down in February, but I think we're going to start seeing a huge decline over the next 10 months. By the end of the year, it's probably going to be about 1 trillion. We're going to lose at least 25% of construction spending, as all the damage taking place now with unemployment, with small business. This is going to be a major downturn of at least 250 to 350 billion in construction spending in the US. Here's an interesting article came out recently: zinc supply cuts outstripped by demand destruction. Now, BMO estimates global zinc demand will fall about 6% this year. I think you can double that. Compared to being flat in 2019. Again, this assumes a recovery in global economy in the second half of the year, Hamilton said. I think this is the most underestimated or misunderstood aspect of what's happening now. There continues to be analysis by mainstream economists and financial analysts that there's going to be this recovery in the second half of the year. Well, we could get a relapse of this global contagion. And so I think what's going to happen in the second half of the year, it's going to surprise people. Demand for base metals, I think the economy is going to roll over even more. Now, what's interesting, Peru and Mexico, which together account for 16% of global zinc supply, have seen mines like BHP and Teck Resources and Penasquito temporary shutdown. So again, we're already seeing it. Again, the first stage is going to be a shutdown due to this global contagion. The second stage is going to be the damage that's already occurred that's going to follow through in the second half of the year. So again, if the world is relying upon 55% of its silver supply, mine supply, as a byproduct of copper, zinc, and lead, towards the end of the year, in the second half of the year, we're going to see a lot more silver supply come off. And at the same time, I believe we're going to see a surge of investment demand. So I said this in a few videos ago, silver mine supply, especially as a byproduct of base metal mining, will start to decline considerably in second quarter and third quarter, and likely even in the fourth quarter. Mine supply for silver could fall by 100 to 150 million ounces by the end of the year. However, physical retail silver investment will continue to surge higher, pushing premiums even higher. And here, I think we're starting to see it. There's a lot more buying of 1,000-ounce silver bars. Now, while that hasn't impacted the silver price, paper price yet, I believe we'll start to see that in the second half of the year. So again, I don't believe Americans understand the situation we're facing. They think that once we go back to work, the states start reopening, things are going to get back to normal. I think we're never going to get back to normal. And unfortunately, it could be much worse than that. There could be so much unemployment. We could see food riots. They may have to even bring in the National Guard to keep things in order. So this is going to be very bad news, and people need to, I'm growing a garden. I grow a garden every year here, and this year we're going to grow the biggest garden ever. And we're going to have canned vegetables, frozen, we're going to freeze our vegetables and dry it. And I believe we could see serious disruptions, not only in the supply chain, but into food. As I'm hearing, Tyson and other meat packing plants are shutting down. Some may come back online, but it's disrupting so much of this food chain that I don't think people are prepared for what's coming. So again, this is the most important reason to own the precious metals, because of the energy. The energy is the #1 driver of the global economy. When energy gets into trouble, the best way to protect wealth is with gold and silver, because they are stores of very important energy equivalent value. Fiat money, financial assets, and even real estate, they do not store. They are not a good store of energy equivalent value. They are IOUs. So in conclusion, I do believe we're going to see major disruptions moving forward with the global economy. It's going to only get worse in the second half of the year. And it's going to negatively impact silver supply, but I believe we're going to see an even larger surge in interest in physical silver investment, and this could positively impact the price. We could see much higher silver prices. So thank you once again for watching this latest video, and if you have not yet subscribed to the SRS Rock Report YouTube channel, please consider doing so. Thank you.